Okay, good morning, traders. Welcome to this live intraday strategy webinar. Today is Thursday, January 10th. Good to be with you guys this morning. Amen. Good morning to you. Hope all is going perfect with you, says Amen. Cheers. Always a pleasure to see you. Robert, great to see you in the room. Pete, Mohammed. We got Sir Ang back in the room. Peter, great to see you all guys here. Ziad, Ty, great to see you this morning. So we are finally getting the dollar breakdown we've been looking for the last 3 weeks. This is the weekly chart here. For the last 5 weeks, we've been looking for this final turnaround. Here's the break below the 200-week moving average, slope support, and the down slope, okay, for the broader pitchfork we've been looking for. So the weekly close is going to be paramount here as we close out the first full week of January trade. On the menu for today, we'll obviously start off with DXY, Euro, Kiwi, and then the flurry of Euro crosses from last night's update. Euro, Kiwi, Euro, Aussie, and an interesting setup in Euro Yen. I'm not sure I'm ready to operate on that yet, but I'm looking for some near-term exhaustion a little bit higher from where we are now. We'll circle back to the previous update on Aussie dollar and Aussie Kiwi. Okay, and dollar CAD will round out the end of the session here. Also, if we have time, and you guys have interest, and we'll take a look at gold and crude real quick. Near-term price action has been lackluster, but certainly the levels of which we're returned are pretty big. So if we have time, we'll take a look at both of those. As always, guys, any questions or trade setups you want to review, feel free to throw them on the message board at any time. Good morning, Mohammed. Great to see you in the room, sir. All right, so let's jump right in. Last night's DXY update, I had a feeling this thing was going to get hung up on that slope, and that's why I drew it in. That's exactly where we paused. This is just a parallel from that drop that you made in the early December, basically the test of the December opening range lows before you broke late in the month. That slope converges just slightly on the November 2017 high. I'll show you that on the daily chart in a moment. But the way it dropped, the way momentum was looking last night, it looked like it wanted to see some sort of recovery. So we're kind of paused here. DXY is lower against all its major counterparts, guys, for the week. If you look at it, this was a very clean and objective weekly opening range on a Wednesday break, looking lower. Okay, we're looking lower. So everything looks good for the short side, but from a price standpoint, you're coming into a near-term inflection zone here near 95. So it could get a little bit of a pullback, some back and fill here today. We'll see how it pans out. Weekly chart, what I just wanted to highlight is we really do need to see that weekly close, at these levels or below this confluence region. Again, the 200-week moving average, long term, right? Slope support, basic slope support. Those are the two reference points, a sliding parallel of that same slope off the lows from here, converge on that same region, and again, that downslope. This is a 38.2 line, okay, of the pitchfork that we've been following from the 2015, 2017 highs. So you saw support, 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 break, acceleration, resistance, acceleration on the upside. If we settle below, it'll bode well for continued downside move here in DXY. Also, keeping in mind that we have clear weekly divergence with price action continuing to make a series of higher highs as the oscillator held those highs, and 2-point trigger break. It's not a really strong one, but it's something that we've been noting for a while now. So from a weekly standpoint, into the start of the year, it does look pretty bearish here for the DXY. However, the magnitude, this is the fourth consecutive weekly decline, does suggest, again, you just want to be a little bit cautious here about chasing anything fresh on the short side for the dollar from these levels. Also, do want to note tomorrow, well, let's jump into the near-term charts first. So here's DXY on the daily. Okay, there's that 2017 November high. Okay, really nice sort of stretch there. You saw a decent pivot in price on both sides, both on the break below and the test above. Again, last year it was decent. Wouldn't say it was anything major, but here we are nonetheless testing that region. The 200-day moving average is just lower, below the 95 handle, and that's kind of, I'd love to see it test that, but I don't know if we'll get that before some sort of near-term recovery. So look, at the end of the day, here's basic slope. This is just trendline support from last year's low. A parallel here was nice resistance, resistance, break, acceleration. Same slope was support. There we are again, and that's the break. So objectively, aside from what anyone thinks, this is where your near-term bearish inval is. You have your 100-day moving average there in blue. Monthly open is just higher, but I wouldn't even go that high. 100-day moving average is right on that slope, which has multiple inflections, including the opening range low, which opened right there. That's what I would need to see hold for the downside to remain viable in the DXY. Okay. Hey, Jay, yeah, great to see you, sir. And you know, we can decorate this however we want with slope here. I was looking at a couple of different, alternatives yesterday, even something like this, off that low that we made on the December 10th decline. That was a test, obviously, of the December opening range lows. Again, we're basically there. Okay, we're basically there. So look for a little bit of a possibility for a support bounce. I'm bearish below that 200-day moving average. So let's call it 96. Downside break, look for that 200-day, but just lower. You're basically looking for that basic slope support off last year's low. Real objective stuff. And I love when stuff is the objectivity is there. What price is inval? So that would be my bearish inval tie. Would be that 96 handle. Let me show you the intraday chart in a moment. Here it is. And here's what we looked at last night, right? So again, that slope, we probed just below, but there's the recoil. And again, we highlighted initial resistance right here at 95.31. That's what we're testing right now. If this breakdown is legit, okay, we basically want to see failure right here. Okay, and just continue to move lower. Seems too simple for me, but that'd be the ideal scenario. If we break higher, it's still bearish below 96. That's the 100-day moving average right there. All right, make sense, Ty? I do want to say that tomorrow we do get some economic data of importance. Now, before that, later tonight, the Fed's Jerome Powell is supposed to be speaking at the Economic Club of Washington. I don't know how much we'll get. It's highlighted as sort of an important event on the economic calendars, both on Reuters and Daily FX. So, take that for what it's worth. The more important read, in my humble opinion, will be tomorrow's Consumer Price Index. We're expecting a 1.9% print year on year, down from a 2.2% clip in November. So this is the December read. More importantly, core CPI is expected, so strip out food and energy, that's expected to hold at 2.2%. Remember, guys, this whole year coming into the start of the year has been about lowering expectations for further interest rates from the Fed, right? We came into the tail end of 2018 saying we're expecting 3, maybe 4 hikes, which seemed really aggressive to me. You guys know that. Now the markets have sort of pared back, and even the Fed's projections have started to pare back to 1, maybe 2 next year. So, the more data that we get to support that reduction in interest rate expectations, it's only going to help our cause here for the dollar short. So if we get softer inflation numbers, should help us, continue to weigh down on the dollar. If you get a print of 2% or stronger on the year-on-year print, you might see a little bit more of recovery, but just know the key levels that we're looking for as possible exhaustion levels here on the DXY. Downside move, again, that 200-day moving average is what I'd be looking for. It comes in just ahead of that 786 retracement. Okay, so let's say like 94.85, and then 94.66 is the 786. So just remember that. Any questions on DXY into the close of the week? Looking good. Could see a little bit of a support bounce here, but structure remains bearish. That's number 1. Number 2, euro. So obviously Jamie nailed the entry on this one with a really good move to the upside here. So on the swing side of things, I don't want to shake you out or interrupt that trade at all. From my standpoint, I kind of bailed most of it at 1550. So here's the euro. Let me show you the weekly chart, just from a top-down approach. And here's what we look like last night. The whole focus of since the start of the year has been, are we going to get the rebound off of major key critical support at 113? We've talked about that region for months and months and months. It's the former just swing high from this November 2016 advance, but it's been a very strong pivot in price. Resistance, break, support on a close basis. Couldn't do anything there into the close of last year, right? 113 was respected as support. Add to that you have that 200-week moving average just sitting right in that zone. So we've been playing, the long side on every attempt on a move into this region. You're seeing the breakout in the euro. I just want to show you the broader picture, bigger picture stuff, like on the weekly chart. 1586 into 116 is basically your major resistance zone. Okay, basic 618 retracement of the decline from the highs that you made mid-year last year. I guess not even mid-year, September decline right there. It's 618. It's also 116.03, the outside weekly reversal off the high that we made there in September. That outside weekly reversal close is right there at 116.03. So you have a really critical zone of just lateral levels of resistance. Forget both of those things I just noted. Okay, forget the outside day reverse, the outside week reversal close in the 618. Look to the left. Support, resistance. Okay, so in and of itself, it is a major key inflection point for the euro price action, period. This is just objective observations here. So while we are encountering, in my humble opinion, 1550 was a big region of near-term resistance, the bigger zone we need to clear on a weekly close basis is essentially 116. That would be breakout territory. Okay, so bigger picture stuff here for the euro heading into the start of the month. Beautiful rebound. I love where we turned. This is the first major key inflection test as you get near 116. Here's euro on the daily chart. Now, what bailed me, or what had me looking for possibility for some weakness here, was this basic slope that we've been following off of the lows. Okay, even without the pitchfork, if I were just to take basic slope resistance, right, parallel, it's right there, right? But you get the picture. Big level of resistance, momentum knocking on the door, really attempting to make a 60 break here. I don't know if you want to call that a concerted breach or not. We did it last time here back in September. Price turned lower from there. So I'm cautious here. This is your first big, sort of level to watch near term. The bigger level still 1586. Remember 116. That outside weekly reversal, that's sort of your big level to validate a larger break to the upside here in euro. Can I have the daily and 240-minute combo chart, please, for a photo? Ty, for this? Yeah, like this. So this is the daily and the 240-minute. I see some new names in here. First of all, so welcome aboard. Great to see you guys in the room. Always remember that there's a camera button on the top of your GoToWebinar screen, so you can take a snapshot of anything that you see presented here. As always, they're all on the daily intraday chart updates as well. So, and here's Ty, the weekly again. Okay, so with this euro chart, that's just a former swing high pivot. That's it. Nothing major. Former swing lows, okay. Former swing highs, sure. 1550 was the target. It also converged right on that parallel. So for me, that was sort of big level. And if we're going to see a pullback, that's the level that we'd be looking to pull back from. And that's basically what I highlighted in last night's update is watch out here. This is going to be where if you're going to get some sort of back and fill, it's a good spot. Now, if we get a washout towards 1496 or 1479, basically that 100-day moving average, I'd be looking for possible exhaustion for a re-entry. Okay, obviously on the swing trade, we're already break even on that one, so let it fly. But for new exposure, those are levels I'd be looking at if we get a washout lower that I'd be, maybe near-term support. You also have the objective weekly, and monthly opening range highs right there as well. Just a sweet spot, right? Topside breach, again, 115.86, 116, big levels of resistance. Okay. That weekly level is where the double top printed on the 4-hour that kick-started the short leg, says Robert. So when you say double top, Robert, let me know what you mean by that. I just get concerned when you're looking at a shorter time frame. Because for the 4-hour, we haven't made a double top per se. We just came into a major inflection point and pulled right back. What's your personal Twitter handle? Ty, it's MB4X. Just send it right there in the chat box. But I do agree. Generally speaking, Robert, this is exactly where you'd want to see some sort of pullback. Broadly speaking, though, we still like the euro long. The whole concept, of the the euro bounce, the dollar rebound off resistance, right? Finally starting to take root here. Okay, so that's DXY and Euro. In-depth coverage to end the week, heading into tomorrow's release. Remember, we do have advanced good trade balance in the U.S. I wouldn't really get too concerned about that, but you have those consumer price index, CPI, inflation read at 830. Okay, number 3, Kiwi. New Zealand dollar looks like this. It's been, what's the word, boring since yesterday. I got excited. I liked, well, first of all, you know that we've been looking to start off the week. If you go to the previous update, guys, the link is always provided for you at the bottom. To start off the week, we were looking for a possible break lower to get long off one of these two levels. We never got it, right? Opening range broke to the upside yesterday. Then we ran right into that 200-day moving average, just higher. You have confluence resistance at 68.23. Both of these regions, levels of which you could see some kickback. So I've been looking to, possibly fade a spike, get a move lower on a little bit of a near-term trade, then again look to reposition for a larger move. But since yesterday, it's been boring. Okay, like what is this? It started to make the move. I went to bed getting pretty excited that we could see some sort of at least pullback towards the opening range highs, towards something. This thing failed at 67.71, and here we are again. So not much momentum behind it. The broader focus is still possible exhaustion off of this region. Again, that key 618 retracement. There's some slope there. This is just a parallel of basic support off these two lows. Possibility for some exhaustion there for a pullback. Ultimately, if we clear this pivot region right here, you're looking for a rally up towards the upper parallels, like 69. Don't necessarily think we'll get that first, but the immediate focus right now is for failure or exhaustion off one of these two highs. Remember, yesterday broke the objective weekly opening range high. So Thursday, Friday high is basically what the expectation is here for Kiwi. Unfortunately, not much to do here on the near-term front, but we'll see what this offers heading to the end of the week. The Euro Kiwi is something that we talked about briefly on the Tuesday webinar, and I just wanted to bring it up because I thought it was an interesting setup that may offer something later this week. And yesterday I gave you an update on that saying, look, there's actually a really clean weekly opening range at play here. Here's Euro Kiwi. Real clean weekly opening range above a support structure that we were looking at is a resistance on the way up that we were looking at last year. Basically last year's open, 69, but also the 38, actually that's on the decline here. So there was a pivot here. Nonetheless, this is the support zone that we highlighted early in the week, and a really clean weekly opening range. Now, overnight, you tried to break the weekly opening range highs, that 50%. Then you failed just higher and pulled back. So again, this is an objective weekly opening range still. Okay, it's basically a failure to break the weekly opening range highs. On Euro Key, remember, the ideal scenario here, and again, this is just my humble opinion, is that you see one last low before you start to correct higher. And that's just basis on the wave count for the advance. It just looks really, really nice. On the longer term, here's the daily chart, right? We broke multi-month downtrend resistance last month on that breakout. So on this spike into this key region of moving average parallel, moving average resistance, you have 200 day, and the 100 day, both offering respective resistance there. So on this decline, I kind of want to see one last low before you mount sort of a more assertive play. So I'm still under the idea that this thing may make another attempt at a move lower. The way to trade it was to short against the opening range highs for the week. If we break lower, I'm looking to buy down here. Even if it doesn't get all the way down here, let's say it breaks these lows and then starts to spike or starts to exhaust right down here, that would still be an entry possibility for me. Just because we're looking for some sort of completion of a correction before we move higher again. Now, having said that, if it breaks 70, 82, basically you're looking for a stretch back into these moving averages. It's an upside movement either way you slice it beyond that. I can't get too excited about buying here into those levels. So still might not be an operable trade necessarily on the immediate front, but ideal scenario, it tries to make a spike at the lows and fails again, just below 168.67 there, or it breaks above 70.80, and you're looking for another run towards those longer term moving averages. Any questions on Euro Key? I know it's an interesting pair, but pick and choose your entries and pick and choose your setups for that matter. There's a lot to choose from right now, so I haven't really been actively getting involved in this one. Mohammed says, Michael, could you please suggest what is the best resource to learn Elliott Wave? Ooh, that's a loaded gun, Mohammed. There's so many resources out there. I would go through the technical section or the resource section that we have here, see how kind of our basic use of Elliott through the strategies and different techniques that we use. There's Daily FX has a whole library on Elliott Wave. The only thing I'll tell you is to be careful getting too deep into Elliott Wave, Mohammed. The issue that at least I've seen over the 15 plus years is people start to get too over involved with this is A, B of a C, and we're working within the confines of this, and it's all about wave identification, and then you're losing sort of the basis. You start to set expectations for, okay, we're in this wave, this has to happen. And I think it just can lead to some really poor behavior. So I'm not trashing Elliott Wave by any means. We do use it, but for us, our basic focus, or in my opinion, the best way to use Elliott Wave is keep it as simple as possible. You're looking for readily identifiable 5-wave patterns, 3-wave corrections. That's it, right? You get too nitty gritty. I know people start to count Elliott waves on a 10 or 30-minute chart. You're gonna, it's a job in and of itself just to sit there and label every wave. And as far as the trading goes, that starts to fall in the back front as far as risk tolerance and what your expectations are and such. So that's all I'll say. Primary example right here on Euro Key, why we're thinking that this thing is larger. Looks like a 1, 2, 3, 4, 5, pretty well identifiable. A lot of times if you bring it into a line chart, it's going to be easier to identify 1, 2, 3, 4, 5. And even within the confines of the advance, on the interior levels, you'll see even here, 1, 2, 3, and you've got like a 4, 5 within the confines of just that third wave, which is typically going to be your largest wave in the 5-wave series. So that would have me looking for sort of just simple ABC in an ideal scenario. That's all I use Elliott for. It sets an expectation to help me identify what I should be looking for. As far as the measured move, and are we always going to get 2 equal legs and over stressing it, I think is where you start to get yourself in trouble. So Mohammed, I hope I didn't just completely throw that at you, but my little opinion there on Elliott, there's a host of resources for sure online, but just make sure you don't get too deep into it. Okay, so that's Euro Kiwi. It's not really on the back burner as sort of our highlighted setup, but definitely something I'm still tracking day in, day out. Number 5 is Euro Aussie. This is a new one to introduce in the week here. He says just to have a general idea, not too deep actually. We'll read from SB. Thanks. Hey, you're more than welcome, Mohammed. And let me tell you, Jamie, Jamie on Daily Effects, when he was with Daily Effects, he used to be huge on Elliott. He ran the Elliott Wave page. So if you really want a little bit more information in depth on, a little bit more practical use, I would definitely bring it up during the midweek strategy webinar with him. I'm sure he'll be able to break it down maybe in clearer terms than I do. But here's Euro Aussie. Really interesting stuff. Okay, Euro Aussie is one of those things where like you're getting some pretty what's the word I want to use? I don't want to say conflicting, but opposite sort of factors to give you bias. Here's the weekly chart. Last week, we came out with a massive outside weekly reversal off of slope resistance. This is a parallel of the same exact slope we've been following from that 2011 and 2012 lows. Okay, and the high that we used in 2014. That pitchfork has been holding this advance like no one's business. You can't make this stuff up. Look at the lower parallel. Perfect support. Median line, decent pivots, right? There's the lower 50 line, just missed it on that drop that we made in December. So look what happened here last week with Euro Aus. Big old outside weekly reversal off slope resistance. Let me redo that. Sorry about that. Retracement is incorrect. There we go. Okay. Look at that massive reversal. And on a close basis, this was the high day close prior to that break that we made last week. The high day close was right at 62.39, the high week close rather. Look at this on a close basis. Boom. It's if that doesn't excite you, check your pulse. Okay, this is beauty in technical analysis. So the way it turned automatically had me looking to the start of the week. All right, maybe this thing has a little bit more drawdown to go. Now on the decline yesterday, what I noted in the report was that we had posted an outside day reversal off the lows, and that's what we did right here, right? Outside day reversal right off the lows. You got a perfect tag of the 100-day moving average. You got a swing low from back here in last year's October opening range. Really nice spot. Here's the rebound. But you're still looking. Again, even if this is an Elliott wave pattern. So Mohammed, just to go back as a quick reminder, this 1, 2, 3, 4, 5 maybe? I don't know. At least one more low should be checked, I think, before you even start to make any assumptive continuation type of play. By the way, here's your new monthly open. I should have changed that yesterday. All right, so basically still looking lower, but if we get down here towards the median line, I'd actually be looking for possible exhaustion. Okay, intraday looks like this. Well, there was some nice structure to the decline. Okay, this is the 120-minute chart. A little bit more of an unorthodox pitchfork here, but has been working really well. 1, 2, 3. Got to like sort of take it backwards a little bit. But the slope has been right on point, right on point. That's the rebound that we made yesterday off of building divergence in momentum. Price action with the lower low. We oscillated a lower low. So sure, get a rebound, no problem. So yesterday's update, we said if we break 61, look for possible exhaustion at 61.90 ahead of this region. So here's the break, and this is kind of what ticked me off this morning, is we didn't quite get that high. I was hoping to get an entry here before the pullback. You still might get it. I don't know. It doesn't look too promising at this point. But remember, the whole idea was to look for a rally to fade for one more low, at least one more stab at 69.50, if not a drop into 58, to be honest with you, before you continue higher here. But certainly the reversal and the outside day that we got yesterday suggested that, yeah, maybe there's a little bit more upswing to go. So maybe I was trying to play this a little bit more conservative because of the opening range break for the week to the upside, because of the fact that we had that divergence. I thought you'd get a little bit more upswing here before it turns. Again, you still might, but that's sort of the idea I'm working with here for Euro Aus. Now, with the fact that Euro is coming off resistance, right? Not surprising to see Euro Aussie starting to correct a little bit lower. But there was nothing here pending, at least last night, to get us in. So if you're trading in Asia and you got a short, whether it's anywhere above 61 or at the 61 handle, a stop against that swing high, limits should be somewhere around that 160 handle, that 100-day moving average. Okay. Questions on Euro Oz. And one more Euro cross. I know I went a little bit crazy with the Euro crosses yesterday, but there's just such an interesting price action going on. Euro yen, I don't really have an intraday setup. Here's what it looks like on the 2-hour chart. There's really nothing to do here just yet. But what I wanted to highlight was the daily chart. If the break that we saw into the start of the year was legit, and I'm talking about the break below 25.50, which was last year's low day close, once we made that and registered that low on May 29th, we've been unable to close below that barrier since the start of the year, right? Basics. Now, what else is there that makes me call that a key resistance range? Well, basic slope, support, 1 touch, 2 touch. There's the break. This was the consolidation that we were in basically all year. So that's there. Then the monthly open. You see these dotted lines? 125.57. That's there too. So objectively, you have the monthly, yearly open. You have the May 2018 low day close. You have former slope support, turned resistance, all stacked up right here. Not to mention that it would necessitate a break back above former pitchfork support, now resistance. So my whole focus on this, and why I didn't even give you an intraday chart, because again, there's nothing to do here just yet. My whole focus is, are we going to get one last stab into this region, basically between 25 and 25.50, looking for the possibility of sort of an exhaustion fail, and then at least another pullback. I don't know if we're going to register another low. I think that might have been a more important, more significant low that we made into the start of the year. But the essential level that we're going to mark as sort of our bearish, or our bullish rather, invalidation level will be 122.66, low day close for this year. That's all to say, guys. Basically, over the next day or so, next week, we're looking to see, are we going to fail into this region? Do we get an exhaustion spike? Where euro is trading now, a pullback might be nice. Where yen is trading now, dollar yen, I hate it, but where it is trading now, also looking for possible exhaustion there. When we get to euro yen, what would one typically look for to gauge when a new swing is ready to materialize? Now it's in a weird contraction. Yeah, so again, here's the intraday chart, Robert. This is why I try not to steer you in the wrong place, guys. So if I don't have a clear, definitive setup, I don't just show you this chart for no reason. So, there's nothing here that really prompts action right now, Robert. We are getting, a series of divergence. Price action's been making higher highs, higher highs, higher highs. The oscillator, a series of lower highs, doesn't necessarily prompt a move per se. You know what I mean? So for me, the ideal scenario would be sort of maybe a spike higher back into this region, failure, maybe some divergence in RSI, maybe a trigger break, maybe an outside 4-hour reversal. You bring it to a 240-minute chart, something like that off the highs would give me a reference point of which to trade against, right? But if you try to, and this is why we say, Robert, just as a side note, that you never want to. It's a fool's errand trying to call a high, because if you were looking this even on near-term price action all week long, and you're like, oh, this is a nice turn, let me take a short against that high. Well, you would have gotten stopped out. Then you might have seen this turn and said, oh, okay, that looks pretty decent. I'm going to take a short against that high. Well, you might have gotten stopped out on that spike. I don't know. But the point is, you need something definitive, right? You need to start seeing a series of lows being broken, not these series of higher lows, higher lows. Now we have equal lows. So it looks like it might be turning. But remember, markets don't reward the masses. So I'd need to see sort of one last exhaustion, something like this. Move higher, you have divergence on that last spike, dribble, dribble, dribble. Once you start breaking those lows, now you have a reference point to trade against that high. Then you try it. Does that make sense? Robert says, gotcha. Good question. Good question. I'm sure. Sorry to divert here, guys, today, but I'm sure someone else in the room has those questions as well. So something to keep an eye on. And again, some basic stuff. I didn't want to clutter this up yesterday, but you know, maybe a spike, 25.90 even. Ideally, that low day close holds. Just keep your eye on that daily chart. Ty says the masses don't have your and Jamie's analysis. Cheers. I appreciate that, sir. Much appreciated. Okay, so that is Euro Yen. That is number 6 on the session. The Aussie crosses we've been following. So Aussie dollar has tested my patience, and I consider myself a patient man. But I'm still sitting in that short. I got, stopped out yesterday at break even on the half. I took the initial entry with even better of an entry than Jamie's swing entry of 71.74. I think he had it. I got in at 71.75 on this spike. On this initial pullback, as soon as we hit that 618 or just ahead of, I was actually these former highs. I did peel off half, went break even, as I always tell you I do. And then it took me out at break even. Again, I got in on this second approach, and I had to stop at 72.14 with y'all, but it's not looking too promising. Kind of losing some flavor. If the dollar rebounds, great. That's sort of what we talked about, the possibility for that DXY rebound, no problem. But I want to see this start to give us some play here. It's starting to, like I said, starting to test my patience. There's a lot of things that are working in our favor here, but that this leaves for another possibility for a stretch up near 72 again, before a possible bear flag pattern takes play here. Long story short, there's no change. Okay, the levels we've been following since the start of the week. Where's the Aussie trade? So Euro Yen levels unchanged. Aussie's right here. No change, right? There was the opening range I highlighted early in the week. I said, look, it's really, really tight. I want to be long, but the focus here is if we break the weekly opening range, it might be an opportunity for an entry off one of these two levels. You didn't get it. Weekly opening range clearly resolved to the upside. We tested the weekly opening range of support. Here we are again, failing at the 100-day moving average. Now you have ongoing divergence. The daily chart also looks like it's a little bit of a tired here range into the 100-day moving average. Yesterday we failed to close above it. Again, for me, it's just a pullback play. It's just a pullback play. Aussie rebounded from radical support into the start of the year. Right, here's the weekly chart. Same chart that's on the report. Same levels we've been looking at since last week. Huge region. 2016 low week close. 2016 low close. Okay, nice little region there. Yeah, we probed through it, but it was a wicked washout into the start of the year. You've been marking divergence on the whole decline. Here's the rebound. 72.40 is your major level of resistance alongside weekly slope. So there's still room, and I do think that we could get a bigger move here to the upside, largely speaking. But on the intraday, on the near term, we've been trying to play the pullback, and I still think that's the play. Remember, keep things objective, guys. We made like a 6%, 6.5% rally off the lows. You've had 5 days, out of the last 5 days, you've had one down day. Momentum is going to check 60 here for the first time since the breakdown. I think it's worth a little bit of a pullback. Yeah, Ty, it's something, again, with the type of strategy I work with, logistically is asking, I would like it to consider if you gave more entry exit stops like Jamie does. On a swing type of trade, it's different. Ty, on intraday, I'm adjusting the levels all the time, getting in a little bit deeper, getting out. It's going to affect my trading, and it's not going to be sort of a viable thing. But he says, when you're reworking a level, do you trade on a touch or wait for the bar to close? Good question. So Ty, when I'm working a level on the daily chart, I'm trying to map out sort of the key levels. Those, in my humble opinion, require daily close. So for example, if I'm talking about a breakout above 671.45, this 618 retracement, I'm going to necessitate a daily close above it to continue favoring the long sides. If I'm already in the position or if I'm looking for a fresh position. Intraday, I'm much deeper. I'm like on a 10-minute chart. I never deal with touch-based type of plays except on let me say this, except on exits, right, Ty? So if I have a target on an intraday chart and I'm looking for a touch of 71.45 on something like this, on that one, the limit would be there. So as market touches it, I don't care. It might break through, it might rebound, I don't know. It's going to exit me out of the trade. And same thing with the stops, obviously. On entries, no, I don't. I usually don't leave hanging orders for if we get 71.85, just put me in. Sometimes I do. If I'm participating in the swing trades, yeah, that's how we'll do it, obviously. But for entry on the intraday charts, I look for what price action is doing. I need a reference point to trade against, and I need something to put me in. So it's either going to be a reversal, maybe an outside reversal candle, something to trigger me into taking the trade. Does that make sense? Pooja says, how about a live trading session maybe once a month or once a quarter? Something to consider, Pooja. For sure. Yeah, there's a lot of, we've been getting a lot of requests for more educational stuff. So we are looking at different alternatives. And by the way, Robert, I appreciate your comments earlier. Let us know, definitely. I always appreciate feedback. Please illustrate it again. Yeah, live trading session. Ty is a big fan of that too. So maybe it's something to consider for sure, guys. But please illustrate it again. So on the near-term front. So for example, this is yesterday's setup, right? Here was the first test of that 200-day moving average, of the 100-day moving average. Didn't do anything. U.S. markets come online. Or no, I'm mistaken. I'm sorry. Yesterday I did take this. Once we got this reversal candle, I did take the short right here. This was after the opening range for U.S. trade. And it was on this drop with a real tight stop against 72.14, same stop that Jamie had. Once we started to break lower, I brought the stop down to this high. Didn't do anything on this stretch. The market rallied into here, didn't do anything. Once we came down late last night, I had a limit order at 71.50s to take off the majority of the position, and then I had a stop at break even. So as we came back up on this spike at the 71.85 entry, I got stopped out at break even again. Okay, so there's an opportunity to get back in on the short side. Here we are still holding it. So the 72.14 stopped. If it gets stopped out, I'm not going to touch it because at that point, if you get a spike up into here, I think you get another opportunity to get short. If we do get the move lower, I'll be looking for reaction at basic slope, what I just showed you guys. That'd be sort of, again, my first start peel off of that position. But that might be, where we get a little bit more definitive price action on the near-term front. If we break that near-term slope, maybe you get that pullback at least 71.45, if not to the median line. And this would be sort of the ideal spot to possibly look for sort of resumption play. Don't forget, one other thing is once we do make the turn, first thing you do is, or at least for me, is I tack on a quick retracement. See where that 38.2 lines up on one of these slopes. And that might be the better play. If it weren't the time that we're at right now, an example to you guys. So where would you re-enter? Where on that slope? So where on that slope would you re-enter on the 10-minute chart? Are you talking about the short side here, Ty, or to get out? I'm not looking to get long off this slope. We're holding shorts right now. And in fact, if you're looking for a position, this is something you'd be looking at into the U.S. trade session. I wouldn't, again, because of the time of what we're talking about when we're doing this webinar, I like to see the U.S. open, but here's a 10-minute trigger which just gave out, or looks like it's giving out. No divergence. And there's nothing in price action to really prompt the move yet. But on something like this, the U.S. market basically opening range is something I'll be looking at, right? So the 830, 930 stretch, looks like you're setting up a nice little range here. Look for that break. If we break the lows that we made for the opening range session, we're looking for the short side trade. You have a stop against the high. That's your first sort of target. If we get through that, you're holding on to the rest of that trade, stops at break even. Maybe take a little bit off. but there's nothing here. Again, I'm not going to front run the U.S. Open by taking a position here, but that's would be how I would play this on the near term front, heading right into the U.S. Open. Ty, does that make sense? That's sort of your European low there. So not necessarily I'll stress that one, but we'll see how the U.S. market opens. 8:30, 9:30 stretch. If we get the downside break again, that's your first level. Take a little bit off. If we get that though, then you're just holding on to that short, looking for the broader setup play. Right? You're looking for 71.45. You're looking for that confluence zone right there. Ty says, learning how to use your work. I miss way too many trades. And guys, if missing trades is something, well, let me take a step back. One thing I do want to know, guys, is don't get FOMO in trading. Guys, I present to you, what, 4 setups a night? By no means am I always operating on all 4 of those. Just know that. You're cherry picking your entries. You're gonna miss a lot of moves. We trade. We follow so many different setups, guys. We're gonna miss moves here and there. Don't let that stress you. It's better that you recognize the move, so that next time you see it, you're more able to take action. That's more important to me. But don't start stressing out just because you're missing moves. We're always gonna miss setups. And sometimes, guys, when I go back and I'm writing the reports for you, and I'm looking and I'm researching the previous update to give you a copy of what I wrote, a lot of times I look back and I'm like, damn, that was a great setup there. I missed too. Man, there was a great setup there. I missed too. That's fine. The idea that we're able to identify him, that's what should be exciting. That's the more important thing. He says, I don't get FOMO. I don't get the trade, period. Yeah, Ty, we'll get you there. Takes time. Okay, so that is Aussie. The other Aussie cross, Aussie Kiwi. Ooh, Aussie Kiwi. So this one's got me all hot and bothered too, because it's been super clean setup as well. So the major trade here, and Aussie Kiwi we've been following for a couple of weeks because of the consolidation that was in pretty much for all of the month of December. Okay, here's Aussie Kiwi on the daily chart. This is the weekly. Obviously the reversal that we saw there last week with that massive outside day candle, or outside week candle, I should say. Here's the daily chart. We've been working with the, I guess let me show you the previous update with this consolidation, right? This 1 month long consolidation, that 1 day stretch that we saw into the open of the year, couldn't even get a 4-hour close anywhere near the bottom of that consolidation structure before we broke to the upside. So last night, I wanted to highlight this new pitchfork, which looks like it is a decent play. And that pitchfork highlighted this 50 line at the objective weekly opening range low. That's 105.41. And that's what I label as near-term support. Obviously, bullish invalidation, very nice objective range at the yearly open. That's 105.02, converges on slope. So the low we registered last night was right there at 105.66. So it didn't quite get into that, range lows before we rebounded. Look, broadly speaking, and I don't know why my pitchfork got jacked up here. Broadly speaking, I do like this. I do like this pair higher. Okay, it's just that near term, we sort of got stuck here. So, the ideal scenario is that you would get a stab and failure into here to execute a new low, and that's where you would fail before resuming. Or if this breaks, even into the yearly open. The fact that we're sort of aggressively bouncing into just a very objective weekly opening range here, yeah, it's kind of teeing me off a little bit, but we'll have to see how this pans out. So I do think, again, you look for maybe another stab at the lows. I don't have any positioning on this currently, but I'm looking for a confirmation that we've broken basic slope resistance, channel resistance. We've broken it, checked it as support. I was ideally get a steeper stab here, but nonetheless, if we break through the median line again, you're just looking for a stab into a 50% retracement. Slope comes in somewhere around 106.83 to the upside. So if you notice why the slope is moving right now, guys, between the two setups is because we're not using the actual stretch low, because that's just, it was a radical, I think, intraday kind of fat finger type deal. I don't want to use that low. So when we move this between the 240 and the 120, the slope, adjusts a little bit when you tag that low. So the same levels are basically being highlighted, but just keep that in mind as we're toggling through here. That's the shift that you're seeing with that upslope. All right, that is Aussie Kiwi. Last but not least, dollar CAD. We had a great short on this one. Again, I told you guys about that I wrapped this one up earlier in the week too. So I've been looking for a rally to fail ahead of the weekly open, ahead of that former slope support to get back in on the short. It hasn't been able to rally, and it hasn't been able to move lower. It's just been straddling the 50% retracement here at 132.23. So again, nothing to do here for me. Ideally you get that December low, you get that 100-day moving average and slope all converging in a couple of days right here around 131.60. That's a level I'm looking for a bigger reaction at. Again, it's one of those trades where it's really stretched, guys. You don't have enough to try to fight the rebound, and I'm not crazy enough to try to short from here. So it was a great setup into the start of the month, even to the start of the week. But the fact that we've dropped this much, and I just can't get involved in this one right now. That was the last level that we were looking for. It was basically that 38.2, especially last week because it converged on just basic slope support. So I don't know how to play this from here. My assumption, again, this is just a guess, would be that you're seeing a near-term consolidation here. Let me bring this to like a 60-minute chart, like right here. This near-term consolidation ends up being sort of unleashes one last terminal thrust before you get a larger rebound. That's sort of what my ideal scenario. So maybe this mini triangle breaks down, sees a tag of the 100-day moving average, or even that 618 on a spike before seeing a larger recovery near term, in dollar CAD. But I don't know. Maybe the consolidation breaks to the upside and you get straight recovery. It's too stretched for me to get involved in from these levels. Robert says, when you're viewing price tests, I've started seeing a pattern where the instrument makes a high, pulls back. It seems that the second leg that always gives the decent swing is that Elliott wave. Robert, so that is a function, a study of part of Elliott wave theory. Absolutely. But what I call that, Robert, is sheer price action. We're watching and studying price action. The way price reacts at a level is always going to be the tell. Okay, and sometimes it's clear, sometimes it's not. But it's always going to be, you're never going to be getting in on the first test, right? Of a level. It's got to be the tests and failure and subsequent failures. Those are the levels that are telling you the opportunities to get back in. So last but not least, I just wanted to touch. Let me know if you guys have any other questions or trade setups that you specifically want to cover as we close out the session. But really quick, just broader picture stuff on crude and gold. You guys know I typically am very close to these trades. Gold has been in a chop fest since the start of the year. Basically you just have a very objective monthly opening range taking shape below a critical resistance barrier. Here's gold on the weekly charts. Okay, last year's open is 1302. You guys know I've been talking about that level for a long time, especially since we got this break of that downslope resistance late last year. 1287 is the 618 of last year's range. 1302 is last year's open. If we're gonna get a pullback, that's the level or zone to pull back from. We're bullish gold. Longer term, we're bullish gold. This thing's been rallying nonstop for the last 4 or 5 weeks. I can't be bullish gold here. You know what I mean? So trim any expectations that you have on the near term here, but we're essentially looking for a bigger washout to the downside to get back in long if we're not in a position. If you are, and if you're looking for a fresh position, again, put a pistol to my head, I'm still looking for a pullback into one of these zones. Former slope resistance, breakout, test of support maybe before you move off. A basic 236 of the advance from last year's low. Former slope, a pullback maybe before you resume higher. That's kind of my thought process here. But on whole, objectively, you have a monthly opening range right below last year's open. That's the resistance range I'm going to need to see break to validate resumption higher. We get the downside break of the weekly, monthly opening ranges, look for a failure at one of these two levels if this current upslope is going to hold. But I do like, broadly speaking, I do like gold more on the upside. I just think that from this advance, boy, a correction would be nice. A correction would be nice. And even in momentum on the daily chart, you have, a lot to look at to suggest, all right, hold your horses, might be in it for a little bit of a pullback here before we start to resume. Intraday, again, have to kind of see if I can rework these levels, but it's not the cleanest. I don't have any reference points to give this thing any structure per se yet. Way too early. So we'll see. For now, it's a consolidation range. Just treat it as such. All right. Look for the break. And last but not least, a real quick look at crude prices. Here's what crude's doing. Again, daily chart has this thing trading just below last year's open. It's 53.08. If you guys remember crude, I caught a lot of heat on this because one of my trades of the year was look for support in gold and crude early in the year. I don't know if this was the low. We didn't even get it this year. It was late last year after that report was published that we finally dropped into 45, 45, 43. Last year's low, or excuse me, now it's 2 years ago, 2017 low week close was 43. The 618 of the entire 2016 advance was 45, 45. I know it's a big range, guys, but this decline is completely just a massive range, right? We've covered a 2-year range in just a few months. So, and on a close basis, we stabbed right there, and that's where we turned. So this is sort of your first major test. I do want to see what the weekly close looks like. If we do close above 50-50, I think you got a better chance of getting up into 55-50s, 55-20s. That's that former opening range high for last year, or again, I say last year, 2017, and a basic 38.2 of last year's range. So that's really your next upside target if we're able to clear these levels. First thing you're looking at is the 200-week moving average. That's resistance. If we breach 55.50, 55.21 is your level of support. I want to see a weekly close above 50.50 to keep this thing going. Could we have the gold charts again, daily and weekly? Thank you. Yeah, sure, Ty. Daily and weekly for gold. Here's the daily. All right, and here is the weekly. And this chart's a little cluttered. There's a lot on here, but here's the big picture. Big picture we've been following in gold for a while now. All right. You got it, Ty. Okay, guys, with that, we're going to go ahead and wrap up the session. Again, we'll see you on Daily FX on Monday morning at 8:30 Eastern for the weekly strategy webinar, right back here on Tuesday and Thursday of next week. Remember, you have those CPI numbers tomorrow at 8:30 Eastern. We're expecting a slight lower print on the year-on-year read, but watch for the core reading. Stripping out food and energy, that's supposed to hold at 2.2%. I think that's what the market will take cues off of. Also, a quick reminder that we do get those comments from Chairman Powell later this afternoon. Just be aware of it. And obviously the ongoing, all this drama that's going on with the U.S. Political environment and everything that's going to happen there with the government shutdown. That's going to be a headline that may offer some shift here or there for broader market sentiment. So just keep that in mind, specifically as we head into the close of the week. All right, guys, best of luck trading. Again, have a great weekend. I'll see you all on Monday. Cheers.